Okay, we're going to go to lesson number 2, okay, which is Japanese candlesticks. Now, Japanese candlesticks, it says, don't tell the market what to do, let the market tell you what to do. What is it going to do, and then go with it. You got to learn how to read these candlesticks. These candlesticks are the language of the market. Now, Japanese candlesticks are busy telling a story to the trader. Candlestick formations are the sign language of the market. They communicate to the trader what is going on in the market. And more importantly, they tell the trader when the market is about to do a U-turn or reverse. And there are bullish candlestick reversion, and we're going to learn 3 of the basic ones of the bullish, and we're going to learn 3 of the basic ones of the bearish. In future lessons, we'll get into some advanced candlestick formation. Now, the candlestick tells you where the market opens and where the market closes. Okay, so the body, this is what's called the body of the candle, where it opens and where it closes. The highest point and lowest point, okay, it also, the wick tells us that. Okay, what was the highest of the day, what was the lowest of the day. Now the color tells us the direction, because it could open high and close lower. Okay, this would be a bearish candlestick formation. Okay, now their candlesticks are made up of 2 classes: a bullish, which are the ones when they're going up, bearish when they're going down. But when they have a full body, you can see that there's strong decision going to the upside or strong decision going to the upside. Those are decision candles. And indecision candles are the ones where the market has long wicks on both sides, or the long side. The market doesn't know if it wants to go to the upside or the downside. And you can see all these candles have a name. Okay, for example, the doji. This is an indecision candle. You can see how the market tried to go up, that tried to go down, and we'll learn how to read these when they get. So let's go to right here. Let me go to the pattern. For example, we're seeing the dollar versus the Japanese yen. Okay, we're in a daily candlestick. Okay, the platform we're seeing, this is called the MetaTrader 4 platform. Okay, which in prior videos I show where you can download and get this platform for free. Okay, and here's where you also trade from. So when you open up your trading account, okay, now when you're in a daily candle, when you're right here at a daily, D1 means each candle is a day. Okay, if I go down to a 4-hour, means each candle is 4 hours. Now when you go to the daily, you can see today we have a bull candle. Okay, the market opened right here at 112.93 yesterday, and today you can see right now it's right around 113.86. Okay, if I want to know how many pips it went up, you can see how it went up about 114 pips. Now this candle right here, which was 3 days ago, you can see that long wick. Okay, this is a very strong pattern when it's at a low point. You can see the market was dropping, did this long wick, very little body on the upside. This is called a hammer formation. That's a very strong upward pattern. Okay, we're going to learn how to read all of these patterns. Okay, now when these combine, when these candles combine, they give us a formation. Okay, and these formations, depending on when they occur, they give us a high probability of the market going down or high probability of the market going up. For example, the evening star pattern, when you see the market going up, does an indecision and then a decision candle to the downside. That's a very strong pattern going down. Now it could have, this is ideal, And this is realistic. Usually you're going to have several indecision candles and then the market going down. Now this candle, the one that goes down, you want to make sure it covers at more than half of this candle to make it a strong selling pattern. Okay, so this is what's going to look like. You have an upside, an indecision candle, and then indecision candle to the downside. You want to get in at the opening of the next candle. Obviously, you need to combine several confirmations. You're not only going to sell just because of candle pattern. This is one confirmation. We're going to learn other confirmations, for example, trend line breaks, channel breaks. Okay, but this would be one of the signals, and you always want to place your stop about 15 pips above that high. And the opposite pattern would be a morning star when you see a decision candle, indecision, and then indecision. So right here, indecision down, indecision, 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 and then decision. This is a bullish pattern. This is the opposite of the evening star. Evening star wants to go down. A morning star wants to go to the upside. So we see decision, indecision, decision up. We buy at the opening of the next candle. Okay, let's go see some examples. See if we could find one. For example, right here, perfect pattern right here. You can see decision, indecision, and then decision. This was a nice bull candle, bull pattern, right? Nice morning star pattern. You always want to make sure that comes after a drop. So the market dropped. It was near a support point. Gave this pattern. We knew it was going to the upside. Also, another confirmation. You're going to learn that in the future lessons. You can see this nice. Actually, let me get the drawing right here. Right, you can see how it was breaking out of this channel. So right here would have been a good entry point. So you're seeing the morning star in the daily, and then when you dropped at a 4-hour, broke out. This was actually one that we alerted. Went up about 125 pips. That's $1,000 in a day. Okay, taking this trade. So that's a nice thing. Once you learn how to read these candlestick patterns, you're going to be able to make some nice money. Now, for example, this one, you had a bullish candle, indecision, and then decision down. So right here you had an evening star. Ideally, it covered right exactly at the half. Ideally, you wanted to cover a little more, but this was still you can see how it dropped very strong to the downside. And I'm sure if you see this on a pattern, here was the evening star. Okay, you would also have seen a trend line break right here, and then down, 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 down. Okay, so you want to combine it with other patterns. Okay, let's look at another pattern. We have a tweezer top formation. When you have two long wicks, very little body, two long wicks, and the wicks are right very close to each other. For example, we're here, long wick, right near, close to each other. Very strong bearish formation here. Now, you want to put your stop above these wicks. Strong move to the downside. Same thing right here. When you see two long wicks, if the wicks are at the bottom, that's a bullish formation. This is what's called a tweezer bottom formation. When you see two long wicks to the downside, this means the market wants to go up. And it doesn't matter if you have a couple of candles in the middle. The importance of two wicks almost at the same area. Now let's see if we could find one. Actually, the Australian versus the Canadian dollar had one signal right here. You can see this tweezer pattern right here, and the market went up. Obviously later it came down, but just if you would have bought right at the open of this candle, you're talking, you just hold it to the first day or the second day, made over 80 pips on this trade. Now when you see one big long wick, now here we had several long wicks, When there's one wick on the top side, this is what's called a shooting star right here. Strong bear. Now when you see the wick, this right here is a shooting star going to the downside. Now when you see the wick, if it comes on a drop and it gives you the same exact formation, this would be an inverse hammer. It's a strong signal to the upside. These are reversal patterns, so they reverse the prior trend. So if it's going to the upside, it reverses to the downside. If it's going to the downside, it reverses to the upside. Just like we saw with the dollar versus the yen. Okay, right here you see a real nice pattern right here. Okay, you see that when it came into the downside, it gave this is what's called a hammer. Okay, strong bullish pattern. So right here we had a hammer, and then the next day it also did the morning star pattern. Same thing right here. You see market went down, gave a nice hammer, and then it went to the upside. Okay, you can make a lot of money just following these candlesticks. I mean, we're talking about 230 pips right there with these two candlesticks. Okay, let's look at another patterns. The bullish engulfing pattern. Now this engulf means it covers, this candle covers the prior candle. It only has to cover the body. Now if it covers several candles, like in this case, it's even a stronger pattern to the upside. Okay, now right here we see a nice bullish engulfing. We buy at the open to go to the upside. The bearish candle, okay, bearish engulfing is when you see this big bear candle covering the prior candle. That's a strong move to the downside. Okay, so let's look at in the live market, and if I see, for example, right here we have on the Australian dollar. This is a 1 hour chart, and these occur on any time frame. Okay, now obviously if it occurs on a daily time frame, it's stronger than if it occurs on a 4 hour or a 1 hour. Right, the higher the time frame, the stronger the pattern. So right here you saw a bear candle, which are the red candles, covering this blue candle. Strong move to the downside right here. Okay, right here you can see bear candle covering this candle prior, and this is a strong signal. I call this the left-right signal, like a left-right punch. When you see a doji bear, because dojis are indecision, and then you have a bear, that's a very strong bearish pattern. Just like right here, we had doji, regular candle, then bear candle. That's a very strong pattern right here. Very strong pattern to the downside. This is a bearish engulfing. Let's see if we see slower time frames just to see. For example, right here, a bullish engulfing pattern. Okay, this body covered the prior body. Okay, you can see this one right here, doji bear. Even if it doesn't cover exactly, but when you see a doji and then a strong bear candle, that's a very strong pattern right here. Doji bear, very strong bearish pattern right here. Bearish engulfing, very strong pattern right there. Right, you can see how many times this pattern right here, you would have made money on all of these. Okay, if you see this bear candle right here, you're talking about 260 pips. Another bear pattern, that's $2,600. Right here, 332, that's $3,000 in 4, 8, 12, 16 hours, because these are 4-hour candles. So you can see the power of learning these candlestick patterns and learning how to analyze the market correctly here. Okay, you can see right here, bear. Let's get another pattern. Let's look at other currency. Here you can find all the currencies. What we saw: the dollar yen, pound dollar, price, and I'll show you guys in a video how to put these price action. Now this is when it gaps down like this. You see an up, a gap down, and then a bear candle. This is what's called a kicker signal, and it's very few times, but that's a very strong bearish pattern. And you can see how 111 pips, it kept on going down, 200 pips in 8 hours after that pattern. Okay, so this is a very strong pattern, the bearish engulfings and bullish engulfing, and you always want to put your stop above the highs. Okay, so you can see right here, evening star pattern. This is a tweezer top, a bullish engulfing, bullish engulfing, bullish engulfing. And you want to print out a chart and just start looking at all these patterns, and you can see that they're found on all of these. On a 50, you can find them on a 30-minute chart, a 1 hour, 2 hour, 4 hour chart, daily, weekly, monthly time frames. And like I said, the smaller the time frame, the stronger the signal, but also the smaller risk your stop loss, because it's smaller to the upside. Usually the smaller time frame, but the larger time frames, it's a little bit larger risk because you have to put your stop above, but they're also stronger formations. Okay, and trading these candlesticks give you the best risk to reward opportunities for a trader. Okay, so I mean, if you just going back here, if you go right here, let's say dollar yen, it keeps going up, it has a lot of strength. Let's say you bought right here at this bullish engulfing, you put your stop below here. So if it drops and it breaks that pattern, this is your risk. But look at all the move that you caught right here. So if you would have bought right after this bullish engulfing, you're talking about 180 pips, and you probably had about 100 pips of risk. Okay, so this is how you can find. Obviously, we're going to learn how to combine several signals so you become a pro at learning how to read these charts. Okay, so if you want alerts, trade alerts, join our team. Go to www.wgalerts.com. You can get started right here for our forex alert. If you're just interested in the alerts, you start off as a member. You also have the ability to become a qualified generator for a one-time $120 fee, where you can refer these alerts and make money referring people. Okay, so it depends if you just want to have the alerts or if you want both. You want to refer and have the alerts. You become a qualified generator. Okay, all you have to do is it's $129.99 for the alerts a month. Okay, and you have to activate the forex training to learn how to use the alerts. This is a one-time fee, $49, and then you have, so to get started the first month, you're going to pay about $180 right here. And if you want to refer, you'll pay that other $120. Which the nice thing about referring is if you refer 3 people, you start making more money than what you're paying. So your alerts become free, and you actually make a profit on the alerts if you refer 3 friends. So here you fill out this data, you put your card number, process, continue, and you're going to get the alerts emailed to you and on your and your application. You want to download the Wealth Generators app, and as soon as you pay, you're going to get a username and password, and these alerts pop up to your phone. So it's pretty interesting here. Okay, so I'll see you guys on the next lesson. We learned Japanese candlesticks. This lesson, we're going to learn another lesson on trading the currency market.